We are currently fixing our gaze on Nuburu Inc., trading under the ticker symbol BURU. At this exact moment, the stock is trading at 0.23 USD, down by 0.013 points, which translates to a painful intraday decline of 5.41%. If you are scanning your Fidelity mobile app or checking the daily losers on your SoFi trading platform, seeing a stock priced at 23 cents with a red percentage next to it usually triggers a very specific reflex: ignore it. The expectation here is that Nuburu is just another piece of market flotsam, a failed SPAC or a broken IPO that is circling the drain of irrelevance. The market sees a stock trading for quarters, not dollars, and assumes the technology is flawed, the management is incompetent, or the business model is broken. They see the graph moving from top left to bottom right over the last year and assume the story is over. The prevailing narrative is that this is dead money, a trap for retail traders on Robinhood stock trading forums who are chasing a lottery ticket that has already expired. But here is the reality that is obscured by that sub-dollar price tag. Nuburu is not selling vaporware, they are selling physics. Specifically, they possess the intellectual property for high-power blue laser technology that solves a fundamental problem in modern manufacturing that traditional infrared lasers cannot touch: welding copper. The reality is that as the world electrifies, driven by Tesla stock and the broader EV mandates, the demand for welding highly reflective metals like copper and aluminum is skyrocketing. Infrared lasers, the industry standard, are notoriously bad at this because copper reflects infrared light. Blue light, however, is absorbed by copper. Nuburu's tech is the key to the lock of next-generation battery manufacturing. The tension today is between a balance sheet that looks like a disaster zone and a technology stack that looks like the future of industrial fabrication. The market is pricing them for bankruptcy. The physics suggests they should be an acquisition target for a major industrial conglomerate. Let's dive into the microstructure of today's trading session. The stock is down 5.41%, trading at $0.23. On a penny stock, every fraction of a cent matters. Looking at the order book on the Interactive Brokers platform, we see a lack of liquidity on the bid side. This means that even small sell orders are pushing the price down significantly. This is classic illiquidity risk. The volume is relatively light, which suggests this isn't a massive institutional dump, but rather a slow bleed caused by a lack of buyers. Retail traders using Robinhood fractional shares or small accounts are likely capitulating, tired of waiting for a reversal. However, there is a nuance here. We are seeing periodic block trades that soak up supply at the 0.22 level. This could be a specialized microcap fund or a strategic investor accumulating shares quietly, betting that the company's IP portfolio is worth more than its current enterprise value. To understand the disconnect, you have to understand the product. This is not software. You can't just fix a bug and ship it. This is hardware. Hard tech. Nuburu makes the blue series of lasers. Why does this matter? Think about NVIDIA stock. NVIDIA makes the chips that power AI, but those chips need power, and that power is delivered through copper interconnects and bus bars. In the world of Apple stock, consumer electronics are getting smaller and denser, requiring microscopic welds of gold and copper. Traditional lasers melt the metal unevenly, creating spatter and defects. Nuburu's blue laser creates a conduction mode weld that is smooth and defect-free. The expectation is that a laser is a laser. The reality is that for the specific metals that power the 21st century, copper, gold, aluminum, Nuburu's blue laser is arguably the only tool that works efficiently at speed. The market is ignoring this technological moat because it is terrified of the cash burn. Financials are the anchor dragging this ship down. There is no sugarcoating it. Nuburu has been burning cash to scale its manufacturing and sales operations. The decline to $0.23 is the market pricing in the risk of further dilution. When a company's stock is this low, raising capital becomes expensive. They have to issue more shares to raise the same amount of money, which dilutes existing shareholders further. This is the death spiral fear that keeps value investors at Fidelity Wealth Management away. They look at the balance sheet, see the short runway, and mark it as uninvestable. However, for the high-risk speculator using self-investing strategies, the question is, will they run out of money before they sign a major licensing deal? If they sign a deal with a Tier 1 auto manufacturer or a battery giant, the stock re-rates instantly. You're betting on a binary outcome. Let's look at the broader additive manufacturing sector. The whole sector has been decimated. Companies like Desktop Metal and Markforged have struggled. Nuburu often gets lumped into this basket because their lasers are used in 3D metal printing. But this is a categorization error. Nuburu is a component supplier, not just a system integrator. They sell the engine, not the car. As online investment trends shift back towards industrial reshoring and automation, the need for faster, more precise welding tools increases. The expectation is that 3D printing is a hype bubble that burst. The reality is that 3D printing is entering the slope of enlightenment where it actually gets used for production, and that production requires the kind of speed that only blue lasers can provide. I want to pause and ask you a question about your risk tolerance. Comment below. Would you ever put money into a stock trading under $1, or is that strictly gambling territory for you? I'm curious to see how many of you treat this as an investment versus a lottery ticket. Now, let's discuss the NASA connection. Nuburu has had contracts with the U.S. Air Force and has been involved in NASA initiatives. This isn't just a garage startup. Their technology has been validated by some of the most demanding engineers on the planet. The fact that they have secured commercial contracts with Ascentium and others proves the tech works. The problem is scaling the sales. The sales cycle for industrial equipment is long, 12 to 18 months. The market has the attention span of a goldfish. It wants quarterly beats. It doesn't want to wait 2 years for a qualification cycle to complete. This duration mismatch between the investor's time horizon, short, and the industrial sales cycle, long, is what crushes the price tag. For those of you watching this on the Robinhood app, you might be tempted by the low price. If it goes to $1, I make 4 times my money. That is the math of the gambler. The math of the investor, perhaps one using Schwab Intelligent Portfolios for their core holdings, looks at the risk of ruin. The risk here is a reverse stock split. To stay listed on the NASDAQ, Nuburu needs to get its price back above $1. If they can't do it organically, they will have to do a reverse split. For example, merge 10 shares into 1. While this doesn't change the value of your holding mathematically, it often is a psychological signal of weakness that attracts short sellers. This is a critical technical factor to watch. If they announce a reverse split vote, the stock could see further volatility. However, consider the acquisition target thesis. Who benefits from owning blue laser tech? A company like IPG Photonics, or perhaps a welding giant like Lincoln Electric, or maybe a battery manufacturer who wants to verticalize their supply chain. At a market cap that is effectively microscopic, Nuburu is bite-sized for a large industrial player. They could buy the company just for the patent portfolio and the engineering team. This is the put option under the stock. You're not just buying the business flow, you're buying the IP value. For a trader using Interactive Broker's stock trading tools, you might look at the option-adjusted spread on their debt or look for unusual volume spikes that might precede an M&A rumor. Let's look at the chart again. $0.23. We are in no man's land. The all-time lows are being tested. If 0.20 breaks, we enter price discovery to the downside, which is terrifying. But the RSI on the daily chart is showing bullish divergence, meaning the price is making lower lows, but the momentum indicator is making higher lows. This often signals that the selling pressure is exhausting itself. The sellers are running out of ammo. A sudden catalyst, like a press release about a new contract in the aerospace sector, could trigger a massive short squeeze. The float is likely small enough that any surge in volume would send the price vertical. This is the allure of the penny stock trade on Robinhood Investments. We must also talk about the blue versus infrared physics again, because it is the core of the thesis. Infrared lasers, 1000 nm wavelength, have been the workhorse for steel, but as we move to a copper-based economy, EVs, wind turbines, data centers, infrared is inefficient. It requires higher power to initiate the weld, which leads to keyholing and defects. Blue lasers 450 nm are absorbed 13 times better by copper. This means you can weld faster with less power and with higher